This is the Asia Trade. I'm Haslinda. Amin in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for gains as a renewed wave of dip buying drives the S&P 500 to its biggest rally since May. But some of Wall Street's top firms are warning of a pullback as sky-high valuations meet souring economic data. President Trump says he'll be substantially raising India's tariff rate over its Russian oil buying, a move that New Delhi says is unjustified. Plus, the CEO of Japan's largest bank calls for a BOJ rate hike to tackle inflation. We'll be hearing exclusively from MUFG's Hironori Kamezawa. We'll take a look at the setup, and we are seeing most Asian markets trending towards that upside. We were just speaking about the fact that dip buyers have come in to scoop up after what has been sort of a pretty troubling sort of period of time, particularly for some of these global markets. But at the moment, we're seeing global stocks seeing their best day in 7 weeks, and that is expected to carry through when it comes to this part of the world. We're seeing Sydney stocks up by just about 1%, indicated as we see that intraday trading going into the next hour of cash trading. We're seeing Chicago Nikkei futures looking kind of muted at the moment, but dollar yen holding pretty steady at just under that 147 level. We do also have some data crossing the Bloomberg when it comes to South Korea's July consumer prices rising about 0.2%. Unsurprising, that was sort of mostly in line with expectations, but we are watching Japanese assets in particular after we did see that decline in Japanese stocks after the US jobs numbers, despite, of course, these sort of heightened expectations of Fed easing that have come from that drove sentiment lower. We did hear from one of Japan's mega banks in terms of their expectations for when the Bank of Japan could make their next move. Take a listen.
Our official company view sees March next year as a possible timing of the rate hike. But personally, I think September or October is quite possible. I think that a rate hike in September or October could be desirable. The reason is that inflation is still quite strong. The number of items subject to price increases has grown by about 5 times compared with last year. And there is also the issue of imported inflation.
Well, over the U.S., we saw dip buying on the back of solid earnings. We saw the likes of MAGA tech driving that rally higher, the likes of NVIDIA, for instance. But really, the story is about treasuries. It was a muted session on the back of what was the best day this year for treasuries. We saw huge moves in the yield last Friday, if you recall. But going forward, traders pretty much sitting on their hands and waiting to see what happens with the 3 auctions, 3s, 10s, and 30s, amounting to $125 billion. Several factors, of course, in play. Of course, those Fed rate cuts expected for the year, with the first one priced in for September. 85% priced in for that move next month. Also, expectations, of course, that perhaps we could see a move in the replacement of Fed Chair Jerome Powell with yet a person who's more aggressive and willing to do more rate cuts. Taking a look at S&P futures, currently up about 1/10 of 1%, Haidi.
Has, of course, all of this, overlaying all of this is still the trade war and the tariff uncertainty, right? With President Trump saying the US will raise tariffs on Indian exports over the country's purchases of Russian oil. New Delhi has called the move unjustified and says its energy imports are a necessity. Let's bring in Bloomberg senior editor Derek Wallbank. So are we seeing sort of positions being strengthened in this situation now? Because it doesn't seem like India is necessarily going to make the changes that President Trump wants to see.
Well, I think one of the things that's difficult about this particularly is that what Donald Trump is asking New Delhi to do is to break up a relationship that has stretched back decades and decades, back to including when the U.S. was seen to be favoring Pakistan between the two there. That's obviously not the case anymore, but, you know, old memories are old memories. And India has seen Russia as a place that has stood by them when they had fewer friends on the world stage than they do now, and does not necessarily want to abandon that economy. At the same point, you know, it's easy to say we'd just like to stop buying oil from an entire country, but this is also the world's most populated country, and it's one that's enjoying a massive onboarding of generational scale of a new middle class. And so all of that, you know, is to say that we're dealing with order of scale magnitudes here that are unlike, you know, most other countries. So the level of difficulty is one thing. The second thing is that Narendra Modi right now, you cannot think that he wants to be seen as someone who got boxed in to his own country's economy by Donald Trump. And so that's going to be a very difficult thing to manage, sort of seeing where the off-ramps are here. One thing I'm particularly watching for is that India is not the only buyer of Russian oil. So if Donald Trump wants to do something about purchases of foreign oil, foreign countries buying Russian oil, cool. If he's talking about India, then what about China? What about, other places like that? And so far, Trump has been really mentioning New Delhi, and he hasn't mentioned really Beijing in these contexts. It's going to be a really interesting thing to see if the president is looking for some sorts of moves from New Delhi. He's looking for maybe some negotiations that wind up at an accessible place, or if this is going to be something that you might even be able to see get expanded and complicate the U.S.-China talks that are at still some very delicate interim stages.
You got to wonder, Derek, how serious Trump is in ramping up tariffs for India. Remember that it does play a strategic role in countering the rise of China.
Haslinda, that's a brilliant point. India has been a geostrategic priority for both Republican and Democratic administrations. Indeed, Trump is one of the people who has most made that. Trump was one of the people popularizing the idea of calling it the Indo-Pacific, not just the Pacific. In part, that's a bid towards emphasizing the role of India in that part of the world, right? And India is seen as a very important country on its own, as I said, as the world's most populous nation, rising middle class, rising economy overall. At the same time, it's also seen as a major counterweight to China, a country that has aspirations as a potential leader of the global South alongside China. And so the idea that this is, that the U.S. would want to push away India, a Quad member nation, I could go on. Every single bit of the U.S.-India relations up until the last week has seemed to be wanting to bring the two closer together, closer in partnership militarily, economically, and in other ways. And so this, it would be really quite something if this were the issue that we're going to break that. I think far from that, the most likely scenario here is that Trump is trying to add pressure to get New Delhi toward a deal rather than trying to blow up that relationship and say, here's the proximate cause. At the same point, this is a bit of a there be dragons kind of moment because India is a very proud country, it's a very large country. Narendra Modi is, is somebody who is not fond of, being seen to be, pushed around on the global stage. And so there's a possibility that this can have outflows beyond the intended points. It's not difficult to see a scenario, even if the intention is moderation, where this can go and escalate beyond where you wanted it to go.
He's perceived as that strongman leader, right? That defiance from Narendra Modi is such a contrast to what we're seeing in terms of the approach from the Swiss, right? Switzerland is ready to kind of make more attractive overtures to the US to try and get those tariffs down.
Yeah, and Switzerland's in a really difficult position right now. 39% tariffs. It was one of the highest ones in the world. And it took, I think, a lot of people by surprise. Switzerland and the U.S. have a long-standing relationship where Switzerland is even a protecting power for the United States in dealing with some countries that the U.S. doesn't have diplomatic relations with. So there's a lot of tight relations there. And Switzerland had been seen as a country that might be on the fast track, that was going to be one of the first ones to get a deal. From all accounts, the Swiss were blindsided, and now they're sort of sat there saying, okay, well, how do we get toward a deal? They're not talking about retaliation. They are talking about trying to maybe improve an offer. But it's very difficult because a lot of the Swiss exports are sort of concentrated. So, you're talking a lot about gold. You're talking about things like watches and things of that nature. So it's not like a broad swath of things. It can be some very specific things. And when it's very specific things and you've got that concentration, things can move a little bit, have a little bit of bigger swings, right? It's not so diffuse. So that does kind of make it a little bit more of a complicated situation. Switzerland, as I say, is looking at trying to figure out what it might be able to offer the Trump administration to reduce these tariffs. Right now, it's getting placed in a quite difficult scenario in that it is at a much higher level than the European Union. Just next door it's much higher level than the United Kingdom, and that sets Switzerland into a very, very difficult competitive scenario. You could even see a scenario with some Swiss watches where it might even be cheaper, given the tariffs, to go get a plane ticket, fly over to Zurich, buy it in person, and then fly back. And those sorts of extremes are things that the Swiss would very much like to avoid.
Well, it is a crippling 39% for the Swiss. Derek, thank you so much for that. Bloomberg senior editor Derek Waldbank. Well, for more on how investors are reacting to the latest trade developments, let's bring in senior editor for markets and Bloomberg opinion columnist John Authers. John, it is so tempting to think that, traders are just shrugging their shoulders, being nonchalant about trade and tariffs, because you keep seeing equities, for instance, keep going up.
Yes, they do. If you want me to offer you some defense or explanation for the equity market doing what it's doing, first of all, the chance of lower interest rates has improved recently, and that's a big deal. Secondly, earnings had a very low bar for the second quarter. The earnings expectations dropped after Liberation Day and never really recovered, which meant that it was very much easier to beat that bar than had been expected. And just tying in with what you've just been discussing, perhaps the single most surprising part of the tariff imbroglio to date is that there has been minimal retaliation, almost none. And that is very positive for stocks. The general assumption was that if the US declares war on everybody else, then they would declare war back, and they haven't, which is good news for the very big multinationals that dominate the S&P. So you certainly can see why it's bouncing back the way it is. Historically, it's any sensible measure. It looks very expensive and doesn't seem to be taking into account any number of very important risks. But those are the reasons for the momentum.
At the same time, a market's sort of pretty sanguine about some of the institutional risks that we're continuing to see. There's, of course, ongoing concern over the Fed independence. There was a firing of the labour statistics chief, for example. I mean, John, after having, worked in China, these were the sort of jokes that people would make about Chinese GDP data. Is that the direction that the fear is that we're heading?
I certainly fear that that's the direction we're moving into. There's a noun I've heard a few times recently, which is bananification, that the US is steadily turning itself into a banana republic. The firing of the chief of the BLS was, indefensible. I know nobody who can really come up with a good reason why that was possible, and it was a disgrace to say that the problems with US data are politically motivated or manipulated. They aren't. There are problems with data, but that was absolutely not the way to deal with those problems or to restore credibility. I think when it comes to the Fed, again, for the longer term, I think the degree of encroachment on its independence is very problematic. That may become more evident once we have our new candidate in mind. They will be in place. They'll be regarded as a stooge. They will be regarded as doing the bidding of the president, who plainly thinks that his ideas about interest rates are that they should be much lower than anybody else thinks they should be. So I think that could become a much greater problem as we move forward. For now, most of the candidates that are being discussed for the Fed vacancy when it arises are pretty plausible ones. If it's Kevin Walsh or Christopher Waller, they're people with a decent, strong track record at the Fed. And obviously the chances of lower rates have improved, and that's enough to keep the markets humming. I think the precedents are terrifying, and the next time the country needs a strong, credible, independent Fed, it will hurt. But again, you can see why it's not necessarily affecting the markets now.
John, as you said, Fed independence is key for traders, for investors, for the markets as a whole. That's enough reason for international investors to start pulling out of the U.S. and find more attractive, more reliable partners, markets.
Yes. I mean, the notion of U.S. exceptionalism seems to have peaked at the beginning of this year, and I suspect that what you will see, not in a straight line, is a steady trend of international investors reducing their dependence on the US. That's in large part because the equity market in the US has grown so much that if you did nothing, you are by now very overweight in the US. That's not necessarily something that happens overnight. In fact, if you're looking at the bigger sovereign wealth funds, pension funds, the really big money, a decision to reduce your weighting to the US is something that is a bit bureaucratic, has to take time. So I suspect that the long-term trend is that we will see a steady repatriation of money from the US. That doesn't mean that it will be in a straight line. It doesn't mean that you'll get resurgences for US assets along the way.
Who would have thought this would happen to the U.S.? John, thank you so much for that. Bloomberg's John Authors there. Still to come on the Asia Trade, we take a closer look at President Trump's AI strategy with White House Science and Technology Director Michael Kratsios. UBS Wealth Management will be joining us to talk market strategy with trade and the Fed in focus. Plus, we get the outlook for Asian energy markets with CLP CEO T.K. Chiang. Much more ahead. Keep it here with us. This is Bloomberg.
Prime Minister Benjamin Netanyahu of Israel says the country will make a fresh plan on how to achieve its goals in Gaza. He's urging national unity in the face of global outrage at the humanitarian toll in the Palestinian territory. Bloomberg's Michael Heath joins us now for more. What's the strategy here? Because as we have sort of more and more, as we say, the pressure, more and more other states considering or saying that they will recognise the Palestinian state, is Netanyahu sort of tuning all that out?
Yeah, look, I mean, to some extent that's right, Haidi, but I think his main thing there is to try and keep the cohesion of Israeli society behind this. I mean, Israel has been fairly united in this fight just because that, almost 2 years ago, that terrorist attack from Hamas was just, extraordinarily brutal and violent and unexpected and really caught Israel by surprise. But as the global pressure mounts and images are now sort of, according to our reporting anyway, they're filtering more into Israel about what's going on with the risk of malnutrition. I mean, UN saying 2 of 3 famine thresholds have been hit there. And also that international pressure as well. I mean, Israel's a very open place, so people sort of, that feeds back. So he's calling for unity there to try to keep the population behind him. I mean, I think his thinking is as long as he's got the US by his side, which he still does, he can weather whatever international storm comes there. But certainly it's the pressure's gone up, and there's also, Bloomberg's been reporting too, there's divisions within even the cabinet, but certainly between the military and the government about just how much more can be done by force in Gaza, which is a pretty reasonable argument you'd expect. I mean, after 2 years on such a small territory, just how much more, how many more targets can there possibly be outside of trying to free these hostages, of course.
Michael, you still have to wonder whether the path to peace is still possible.
Yeah, well, I mean, that's exactly right, Haslinda. I mean, all of these countries are sort of, calling for a two-state solution. Australia as well saying exactly the same thing, and the UK and France and Canada are saying they'll recognise a Palestinian state. But, just the amount of destruction there and the sense, it's a very right-wing government in Israel. There's sort of this sense that there's talk of resettling parts of Gaza and that sort of thing, that the idea of how you'd find a path to peace in this situation seems extraordinary. I mean, certainly Hamas will need to be removed from the scene and you need the Palestinian Authority back in, but Israel's not very keen to negotiate with them too. So Israel sort of made this situation where there's no one on the other side. I mean, Hamas, we all understand, cannot, they can't be part of any peace process, but the Palestinian Authority, one would assume, would be. But it's just very difficult. I mean, there's this sense, it seems, that Prime Minister Netanyahu thinks this can be solved by military means, and wars are never, at the end, there's always, unless it's unconditional surrender, there's a political agreement, and there sort of has to be here. So, yeah, it's very hard to see where it goes in terms of peace.
Bloomberg's Michael Heath. We do have more ahead here on the Asia Trade. This is Bloomberg.
Welcome back to the Asia Trade. The latest from the corporate front. Tesla has approved an interim stock award worth about $30 billion for CEO Elon Musk to keep his attention on the automaker. It includes 96 million shares that will vest if Musk continues to serve in the top post for another 2 years. The massive payout comes as the legal fight over a 2018 pay package drags on. Tesla's board calls the award a first step good faith payment. Taiwan's Honhai is selling an Ohio EV plant for $375 million, but plans to keep operating it to build AI servers for NVIDIA. The move reflects surging demand for AI infrastructure in the U.S. and marks a pivot away from its struggling EV efforts. In a statement, the company, also known as Foxconn, says proceeds from the Ohio deal will be reinvested in the U.S. And Bloomberg's been told that the Adani Group is exploring a tie-up with China's BYD to make batteries and extend its push into clean energy. Sources say the conglomerate's chairman, Gautam Adani, is personally leading the discussions, with the group aiming to begin mass production of lithium-ion cells. In a stock exchange filing, the Adani Group denies it's in talks with BYD. Shares in Lyft and Baidu rose in the U.S. after they announced a partnership to roll out robo-taxis in Europe by next year. The service would start in Germany and the U.K. and follows Lyft's acquisition of the taxi app FreeNow that operates in 9 countries. The companies say the fleet is expected to grow to thousands of vehicles across Europe in coming years.
Take a look at what we're watching when it comes to the FX side of play, as we see, of course, some risk sentiment returning to global markets. Equities seeing their best day in about 7 weeks. We are seeing dollar yen holding pretty steady. We had a bit of a pile in when it comes to the yen after the poor US jobs data, the move that we saw in treasuries as well playing there. Watching the Swissy as well, as the Swiss government really attempts to try and get a more favourable deal from the Trump administration. The euro, though, still seeing some upside. This is Bloomberg.
You're watching the Asia Trade. This is how it's shaping up to be for Asian markets as we count down to the open. Several factors in play, of course. Expectations of Fed rate cuts this year, 2 being priced in, with the first one expected in September. 85% chance of that happening just next month. Of course, tariffs also front and center, in particular India. Remember that Trump is taking issue with India's purchases of Russian oil, discounted Russian oil. He's threatening to raise tariff rates for India, currently standing at 25%. It would be detrimental to the Indian economy, according to some analysts. And of course, in the Bond market, we have treasuries in focus. We're, of course, watching out for the new auctions of 3s, 10s, and 30s. We saw huge moves on Friday in yields and pretty choppy at the last trading session, though. Now, closer to home, the APEC Digital and AI Ministerial Meeting is underway in South Korea, with officials gathering to discuss digital regulation and AI governance in the region. Our next guest is one of the speakers and played a key role shaping the Trump administration's AI action plan. Joining us now is Michael Kratsios, Director of the White House Office of Science and Technology Policy. Michael, good to have you with us, and welcome to the region. Talk to us about how the U.S. views, its approach to China access to AI chips. We know that you relented, allowing NVIDIA to sell those H20 chips, but tightened some other export controls. How do you square that?
Hi, thank you so much for having me, and good morning. We're excited to be here in South Korea for the APEC Digital Ministerial. I think the message that we want to bring here is less about export controls and more about export promotion. The third pillar of President Trump's AI action plan, which we unveiled on July 23rd, is all about creating full-stack AI packages that we want to share with the world. And APEC is the first place we're going out to share that message. The United States has the best chips, it has the best models, and it has the best applications. And what we're going to be working on over the next few months is putting together American AI full-stack packages and trying to export those out to lots of countries around the world. That's the message we're bringing here, that the American AI industry is open for business.
It's hard to talk about APEC without focusing on China, because that's where the beef is between the U.S. and China, Michael. I mean, when it comes to its approach to China, might we still see a blanket ban at some point in time?
I think right now there's already a set of export controls around our highest end chips, and I think that's the current status quo. I think most of the discussion between China and the U.S. At this particular ministerial was more around AI governance. And the Chinese at a conference in Shanghai last week unveiled their action plan, and it focused a lot on global AI governance. And that's something that the U.S. takes a different position on. We believe that each country should be able to set their own destiny on the way that they think about regulating artificial intelligence. And we believe that the U.S. model, one that puts innovation first, is going to be the most attractive model for most countries around the world. So those are the types of conversations that were mostly discussed in the ministerial yesterday.
Does the U.S. strategy, when it comes to the geopolitical aspect of technology, change depending on what sort of relationship and deal is struck with China? Because we know that President Trump is sort of quite happy to take the approach of putting everything on the table when talking about trade.
On the trade issue, I defer to my colleagues, Secretary Lutnick and Ambassador Greer and Secretary Bessent, and obviously the dealmaker-in-chief, the President himself.
What I mean is that some of the issues and the strategies and policies within your realm could also come up in these conversations, and I believe have come up in these conversations. So does that sort of change the sort of journey that you're on in terms of what these policies look like, depending on how that relationship shapes up?
Absolutely. I think we're one cohesive administration that thinks through a lot of these issues, whether it's in the trade realm or in singularly in the artificial intelligence realm. I think we, as an admin and as a White House, thought through a lot of this when we were putting together the AI action plan. The first pillar was all about innovation, about how we in the United States can continue to be the home for the next great technological discoveries in AI. And that's all about creating a regulatory environment that allows that to happen. The second pillar was about infrastructure, and that is how we can build out the necessary power and compute in the United States to power this great industry. And the third, which relates a lot to your question, is how do we actually export this American AI abroad? And part of that export strategy is how we think about export controls for other countries around the world. And as we think through some of these bigger trade issues, obviously the way that we think about chips does come into play.
As much as the U.S. takes issue with China, China's taking issue as well. In fact, it says that NVIDIA chips are a security vulnerability for the country. What's your take? What's your response to that?
I think for us right now, the 3 highest-end NVIDIA chips are currently export-controlled, and the H20 chip that made a lot of news is one that any buyer in China will have to file for a license to buy it with our Commerce Department. So the Commerce Department will continue to go through the analysis of weighing the cost benefits of that particular sale. So in some ways, it's a marked difference from the way that the Biden administration thought about those chips, which essentially allowed them to flow freely into China.
Michael, earlier you talked about how the U.S. AI stack is the best. You have the best models, best practices. How are you convincing APEC countries to go with the U.S. stack versus China? Because some see China's, I guess, proposition as cheaper and better in some sense.
Yeah, well, better it obviously isn't, and that's for sure. The U.S. does have the best chips, the best models, and the best applications, as you said yourself. So I think there isn't a lot of convincing that we need to do on the prowess of our technology. I think what we need to do a lot of work on is meeting the customers where they are, creating packages that can easily be absorbed by and integrated into the economies of a lot of these customers around the world. And that's why we're taking a lot of effort with the Commerce Department to build appealing packages. And a lot of these customers don't necessarily know how to build an entire AI ecosystem. And the U.S. is really, really good at that. We know how to build the best AI data centers. We know how to apply the best large language models on top of those and how to build applications even on top of that. So for us, it's sharing those learnings with the rest of the world and being able to allow them to take advantage of the great technology we have built here in the United States.
Are there more tariffs on chips that are under consideration or discussion, or is it always sort of a potential discussion area? And are you hearing much from your sort of peers and colleagues within APEC in terms of the relief that they might be seeking from that for a sectoral exemption?
That's a little bit out of my domain. I'm the President's Science and Technology Advisor. I think the main message that we're bringing here is that we are ready to share our AI stack around the world, and we've had a tremendous reception from lots of the tech ministers who were my counterparts here at the ministerial. I think there is a real palatable appetite all around the world to ensure that the benefits of this technology can actually be realized by citizens globally. And the best way to do that is to have access to the best stack in the world, and that's what we have to offer. And it's been a very exciting trip, and I'm very optimistic about how much appetite there is to work with us on these issues.
Has there been any concern or evidence about smuggling of NVIDIA chips into China? Has that come up in some of these bilateral, multilateral conversations?
That's not something that's come up in this meeting. Obviously, there's been wide-ranging reporting on that particular issue, and there's been an effort by our Commerce Department to step up enforcement, and it's something that we need to continue to do more of. Smuggling is illegal, and we need to make sure that any country around the world that has an export license for a particular chip adheres to that license, and those chips don't end up in places they shouldn't.
So in the same breath, would the U.S. then support location tracking technology to ensure that smuggling doesn't happen?
That's a really great question. In the President's AI Action Plan, under the third pillar, there is discussion around very important research and development that needs to be done on potentially the types of software or even physical changes you could make to the chips themselves to do better location tracking. And that's something that we're exploring and we explicitly included in the plan.
I'm just wondering, on the back of that, Michael, whether you've had conversations with AMD, with NVIDIA, about location tracking technology.
I haven't had those conversations personally, but both CEOs were at our AI Action Summit in Washington, where the President, the Vice President, and 5 cabinet secretaries all came together to unveil the plan. I think both companies are very enthusiastic about the future of the American AI industry and very enthusiastic about participating in the AI export program. We have 2 executives that have sort of fundamentally transformed the AI industry, and these are both great American companies that we're excited to build into our packages.
What are the plans, if there are any, when it comes to what happens with the AI diffusion rule or something similar that sort of goes to that sort of export control side? Is that a concern for some of these traditional US allies, like South Korea and Japan?
Yeah, so the Biden administration's AI diffusion rule was a real slap in the face to a lot of our partners and allies around the world. These are our friends, these are our partners, these are our allies, and the Biden administration went out of their way to make it extraordinarily difficult for them to access this great American technology. The President and the Secretary of Commerce turned the page on this rule and pulled it back, and now we have an opportunity to share the totality of the American AI stack with all these partners and allies who are so enthusiastic about building AI for their people. So it's a huge step forward, and the AI Action Plan really put into focus how we're going to be turning the page on the diffusion rule.
So does that mean no caps on the level of compute for some of these partners?
I think the way that we're thinking about it is we want to get compute algorithms and applications out to the world to a lot of our partners and allies. The diffusion rule made that extraordinarily challenging and hard, and it was really unnecessary. So we've made a big step forward in making it easier to work with our partners and allies and getting them hooked on to the American AI stack and ecosystem, and ultimately be able to ensure that their citizens can realize the full benefits of AI.
Michael, really great to have you with us. Michael Kratsios, Director of the White House Office of Science and Technology Policy. Let's take a quick look at what we're tracking when it comes to global bonds. It has been quite a reversal, particularly on the shorter end, given that we have seen quite a lot of concern on the longer end of global bonds. But all of that sort of changed as we had that disappointing labour market data out on Friday and sort of reshaping some of these Fed expectations as well. This is a picture when it comes to trading in Treasury futures as we're watching at the moment. And we have seen really that reaction across the JGBs and some of the sovereign bonds in this part of the world as well. That historic gain ahead of quarterly auctions is what we saw, with yields on those longer dated bonds really settling a little bit lower in New York. Shorter dated yields were a little bit less changed in that session. We heard from Morgan Stanley saying that the sort of negative surprises like that payroll numbers usually will move markets over a few days, potentially weeks, and they continue to recommend a long position when it comes to US 5 years has.
That's right. We're also keeping an eye on the auctions, 3s, 10s, and 30s. Haidi, other stories we're following. Brazil's former president, Jair Bolsonaro, has been ordered into house arrest for defying a ban on using social media while standing trial of an alleged coup attempt. A Supreme Court justice signed the order on Monday after Bolsonaro's supporters staged rallies across Brazil. The judge also says Bolsonaro acted illicitly by addressing the demonstrators over social media. Australian federal police have charged a Chinese national under foreign interference laws for allegedly collecting information on a Buddhist organization targeted by Beijing. The woman is also an Australian permanent resident, and police say they expect more arrests. Australia introduced foreign interference laws in 2018, and the case raises the risk of renewing tensions between Canberra and Beijing. And Beijing faces another round of torrential rain just a week after downpours unleashed flooding that killed at least 44 people. The city's weather service raised its rainstorm warning to red on Monday, with the heaviest rainfall expected through dawn on Tuesday. And Hong Kong has also issued a black rain warning, its highest level alert for the 4th time in a week. More ahead on the Asia trade. This is Bloomberg. And we're counting down to the Japan Open at the top of the hour. We're keeping an eye on JGBs in particular, and we're having our eyes on the BOJ minutes. Of course, we had the BOJ standing pat. Some expectations perhaps it would move by the end of the year. There are lingering concerns in the political situation in the country, the upcoming government bond auctions as well. That may limit the upside of the bond market in Japan. Now, the CEO of Japan's biggest bank, Mitsubishi UFJ Financial Group, says it's desirable that the BOJ raises rates as soon as its next meeting in September, given Japan's higher inflation outlook. Hironori Kamezawa spoke with Bloomberg exclusively about interest rates in Japan's recent trade deal with President Trump.
I don't think everything is completely clear yet, but the fact that an agreement has been reached is significant. I believe this gives us a clearer outlook than before. An increase to a 15% tariff is not a small number, and many sectors and companies are likely to be affected. On the other hand, the fact that we can now see some clarity is important. When we set our performance targets at the beginning of the fiscal year, we did so based on the assumption of an increase of tariffs to 10% plus a buffer, the level at which the global network and supply chain would not be disrupted. In that sense, the 15% increase is slightly higher than our initial forecast, which was closer to 10%, but it's still within the range we expected. Overall, regarding the outlook for the Japanese economy, I think the underlying economic recovery will remain intact. GDP will probably decline by around 0.5 to 0.6%, but the underlying economic recovery will continue. As for our current plans at MUFG, we believe that there is no need to make any major changes at this point. There are a few uncertainties, so we'll wait until the situation becomes clearer.
JGB yields are rising, not only for ultra-long-term bonds, but also for 10-year bonds. You've explained that you are taking a cautious approach to position building. Could you explain that? In addition, how high do you think 10-year bond yields will rise in the future?
We do not consider it prudent to publicly disclose our position at this stage. But our basic view is that given the current trend of rising interest rates in Japan, the key question is at what level we should purchase bonds. At the same time, as seen in the results of the recent upper house election, rising yields are an alarm bell in the policy debate over fiscal expansion. I think the trend will continue for a while, so I don't think it's a situation where we should rush to buy right now. While it's hard to pinpoint an exact level, if we assume a terminal rate of around 1.5%, the 10-year yield at that point would be around 2%. So the range from the latter half of 1% to around 2% could be a level where we could consider buying. But as I mentioned earlier, the current trend is toward a slight rise in interest rates. So I think it is important to watch the situation closely and wait for the right timing.
The Bank of Japan held its monetary policy meeting. The decision was to keep rates unchanged, but with tariff negotiations settling down, some are saying that the environment for a rate hike within the year is in place. What is your view on the possibility of a rate hike within the year?
Our official company view sees March next year as a possible timing of the rate hike. But personally, I think September or October is quite possible. I think that a rate hike in September or October could be desirable. The reason is that inflation is still quite strong. The number of items subject to price increases has grown by about 5 times compared with last year. And there's also the issue of imported inflation. In that sense, I personally think that this autumn is a reasonable time for an interest rate hike. But as various statistical data will be released in the coming months, if the growth rate figures are not as strong as expected when they come out, there may be discussions to take a wait-and-see approach. The timing could shift to around March next year. We'll see a period of careful monitoring of economic data, but I think it's entirely possible.
Hironori Kamezawa, CEO Mitsubishi UFJ Financial Group, speaking exclusively with Bloomberg's Hideki Suzuki. And we'll be watching MUFG shares when trading starts in Japan in the next hour. The mega bank kept its forecast for another year of record profit after earnings topped expectations in the first quarter. Haidi.
Yeah, Mitsubishi Heavy is in focus too. The company sealing a deal to build a new class of naval frigates for Australia, beating out a European rival. So Canberra selecting Mitsubishi Heavy Industries to build that, according to the Defence Minister Richard Marles this morning, boosting strategic ties between the nations, beating out some of these European rivals. More ahead here on the Asia Trade. This is Bloomberg. We are taking a look at some of these headlines on the corporate front at the moment. Palantir shares jumping in late trade after it posted a 48% increase in second quarter revenue to more than $1 billion. The data software firm is citing what it calls the astonishing impact of AI tools on its business. Palantir also raised its revenue outlook for the year to more than $4 billion, beating Wall Street estimates. An affiliate of China's Ant Group is selling its remaining stake in the Indian payments giant Paytm. Deal terms seen by Bloomberg value the transaction at about $434 million. Those shares will be sold Tuesday in block trades with the floor price at around a 5% discount to Monday's close. The sale would complete Ant's exit from Paytm following a steep post-IPO decline. We are just getting the minutes from the Bank of Japan's June policy meeting as expectations really ramp up as to when that next move will be. Quite significantly, the BOJ members cited the need to watch risks from the US tariff situation as well as the Middle East, saying that although trade and other policies were expected to lead to a slowdown in overseas economies, they were projected to see a gradual acceleration in their growth rate thereafter and then some moderate growth there. So there was recognition from the Bank of Japan members that there were extremely high uncertainties over the future course and the impact of tariff as well as other policies. Also really speaking about the resilience of the Japanese economy in terms of one member saying that we could see an unexpected upturn or inflationary pressure. Meanwhile, the US, Europe, China and other emerging economies all lean towards accommodative policies, both in fiscal and monetary. Really speaking a little bit more about sort of overseas markets and how that sentiment has also improved as well. We're also looking ahead to wage data, which of course is really core to the trajectory for the Bank of Japan and policymakers going forward. Likely to see, according to Bloomberg Economics, an acceleration in June. Bigger summer bonuses, agreed wages, wage raises, I should say, in those spring pay talks as well. So looking for more evidence that that wage price cycle continues to go along. The market opens in Sydney, Seoul and Tokyo next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens, where sentiment looks like it's giving a boost when it comes to what we saw yesterday, the return of dip buys to the US market, despite some warnings on Wall Street that valuations are still high and we're looking pretty stretched. Still, we are seeing that return to more positive sentiment, particularly looking like it could play out when it comes to Japan, given the down day that we had yesterday. But still, Trump tariff risk continues to play out, particularly when it comes to the likes of India vowing to ramp up these tariffs and escalating their spat over the purchases of Russian crude. This is a picture when it comes to Japanese markets just coming online as we see the Nikkei 225 as well as some of these Japanese bonds, given the moves that we've seen across treasuries and JGBs. The slump that we saw in the Japan session yesterday, of course, coming on the back of the disappointing numbers in the payrolls data from the US on Friday, as well as some of these sort of slightly renuanced expectations of when the Fed might actually move to ease rates later on this year. Nikkei 225 up by just about 0.5%, a little bit of upside there when it comes to the topics as well. Dollar yen is seeing that sort of 146 handle, the 147 level is sort of starting to fade a little bit after the yen rallied against the dollar on speculation that the Fed will cut rates. We did hear some of the analysis saying that this kind of data really does make investors worry that a recession might already be sort of underneath the surface, if you will. Take a look at Korean stocks at the moment. This is what we're watching when it comes to the start of trading. The first few minutes or so when it comes to the Kospi, up by just about 1.3% there. We had inflation numbers coming in as expected, but really showing that picture of cooling. So that does give a little bit more space for the Bank of Korea and the case there for them to cut again. Switching it out to Australia at the moment, this is as we get that staggered start for the ASX coming online, just the first minute or so. It's hard to get that sort of read as we get that alphabetical coming onto the markets, about 0.8% higher, though, is what we're seeing, as well as a little bit of upside when it comes to the Aussie dollar, given that we saw the moderation in that rally in the greenback. Global stocks overall, though, seeing their best day in about 7 weeks, and taking a look at what we're watching when it comes to energy as well, holding that drop with, of course, the US-India sort of situation with the Russian crude, but also the move that we saw from OPEC Plus and some uncertainty going forward, both when it comes to supply to the market and the demand side. Let's get some more now. I want to bring in Hartmut Issel, who's the head of APAC Equities and Credit at UBS Wealth Management. So we have seen sort of another move higher when it comes to sentiment. What do you make of this? Is this sort of complacency when it comes to the trade risks? Is it there is no alternative at the moment? Is it just the kind of continuation of the taco trade?
Yeah, I think there's two factors coming together. So one is, economy. We already seeing that. It's probably not the last kind of data that we're seeing, that it slows a bit. I mean, not towards a recession, but certainly slower than it was last year, for example. And also on the earnings side, we saw a very strong second quarter still, especially also in the US. But it's also relatively clear to us that, not quite that number will probably not be held up. It probably will come a bit lower, sort of mid-single digits, maybe for the next 2 quarters, that kind of scenario. On the other hand, with more and more clarity that the rate side, or the Fed side, that will come down. So the rate cuts are probably only a month away by now, and that supports. And then lastly, you have sort of a PE multiple that is, especially in the US already, there where we should be, and therefore what we're seeing is, some more upside, maybe call it a 6,500 towards the middle of next year. So let's say 12 months, but it will be a grinding one, or especially over the next couple of months, probably a little bit of a pause here is also in place, and then we can move a bit higher towards maybe middle of next year.
Your base case is that tariffs will kind of stay at around 15%, right? If that sort of eventuates, where do you see the opportunities, particularly in the Asia Pacific?
In Asia Pacific, we have a couple regional ideas. Right, so on the China tech side, we like that part. And then India, you just mentioned, it is a bit, perhaps surprising. Right? India was actually the first economy that went into negotiations or talks with the US very, very early, basically January this year, and still not fully done. Right? So on the other hand, that also means I think both sides want to come to a deal. So maybe it takes until the end of this month. Right? We know that the US delegation also will visit India. So will visit India. So there's some potential there. And otherwise, in the maybe somewhat smaller markets, also more here in the region, ASEAN, I would also highlight Singapore, which we upgraded a couple of weeks ago, so not too long ago. And that's, again, on the other side, right? So here we're seeing dividends in a very stable currency environment that also attracts a lot of investors. And on top of that, throughout the second half of this year, we'll also expect more in Asia in general, what is called oftentimes value-up programs, right? So Korea is another one, etc. There's a couple of markets. So Singapore also trying to more from the official side here support the markets a bit. So Singapore could also be an interesting diversification angle.
Do you look at China at this point, given what appears to be an ongoing, if not perhaps certain truce between the US and China?
For China overall, we have a neutral, so really sort of the sector, and it's of course by now a very, very big sector that we like is indeed the tech side. Right? So here we have earnings growth that is a bit difficult to find elsewhere. And so it's the internet side for sure, but also here and there we're looking at robotics, humanoids, and also some new waves that are coming up that could also be interesting for some of these stocks. So probably the focus within China is a bit on that side right now.
There's a host of other concerns as well, right? Not least of which is also the worries over Fed independence and sort of the, institutional independence in the US. Is that something that weighs into the outlook when it comes to the idea of fading US exceptionalism?
Yeah, certainly there's a lot of discussion around it, but we'll see. Right? So a potential candidate for succession and on the Fed side, we're probably not going to have to wait too long to see that, but that doesn't necessarily, right? It's too early to say, that will certainly question the independence. We'll see actually who comes in and how that plays out. So certainly something to watch, but is that something I would place a lot of investment calls on right now? Probably not at this point.
Does a move that we see in sovereign bonds, treasuries in particular, is that sustainable?
I think it is sustainable. We think it is sustainable. So we have, for the end of this year, in the US, for example, on a 10-year, we have a 4.0%. So there's still more upside, if you will, on the bond side. And indeed, this is probably an area where we really also put some focus, or we call it quality bonds. So one is the high grade side, the other one maybe to some extent investment grade. We see that if we go higher on the risk curve, we have actually, it spreads already a bit tight, right? So the pricing is not quite as attractive, we think. And with our view that, yes, rates come down on the front end, yields also on the longer end, there's actually quite a good scenario here for the bond side, especially the more quality ones.
You would like to still keep some position in gold?
Yeah, I think probably that's not a bad idea. We also have a forecast here for 3,500, so even a bit of clip up here for profits. But yeah, it gives us sort of a diversification, especially with a risk angle, right? You mentioned tariffs before, Fed independence, etc. I mean, all these discussions, they keep going, so having a bit of gold there in the portfolio is also a good idea.
Issel of UBS Wealth Management, always great to have you with us. One of the stocks we're watching in the Tokyo session is Mitsubishi Heavy. This after we heard that they had been selected to build a new naval frigate for Australia, so edging out some of those European competitors. We've seen Australia choosing Japan's Mitsubishi Heavy Industries to build a new class of naval frigate. We heard from the Defence Minister Miles earlier this morning. The Mogami-class frigate is stealthy with 32 vertical launch cells capable of delivering long-range missiles. The next stage of the procurement process will be entered into with a binding commercial contract with Mitsubishi Heavy Industries alongside the Japanese government in 2026. So this is being shaped as a very significant moment when it comes to Japan-Australia bilateral relations, the biggest defence industry agreement that would have ever been struck between Japan and Australia. Seeing the upside there, about 3.25% when it comes to Mitsubishi Heavy Industries at the moment. We are continuing to sort of watch that, with the first 3 out of a total of 11 frigates to be built in Japan, the first delivery in 2029 and into service in 2030. So we had also seen Tokyo sort of try to make this deal more attractive to Australia, with plans for local production in Australia after the initial delivery. We could also see Australia get priority for the first ship ahead of actually Japan's own navy. So continuing to watch that upside. It's just really starting to climb now to almost towards 4% higher for Mitsubishi Heavy Industries in the early part of the trading session. More ahead here in the Asia Trade. This is Bloomberg. Take a look at what we're watching when it comes to Japan at the moment. Seeing a bit of a comeback when it comes to equity sentiment, tracking the dip buying positivity that we had on Wall Street overnight following the slump that was Monday's session. Just that reaction to that US payrolls data as well. So we are seeing traders kind of burnt out by that August meltdown, continuing to see a little bit of firmer footing when it comes to Japanese stocks. We've got the topics kind of hovering near record highs at the moment as well. A lot of analysts talking about the stability of clearer BOJ messaging, corporate reform still making progress, and a better than expected US tariff deal as well. We are also hearing a little bit when it comes to the chief trade negotiator, Kamezawa. They're speaking in Tokyo, saying that they'll build supply chains in the US that benefits both Japan and the United States as we continue to sort of watch the implications of this trade deal that was one of the initial ones that were announced last week and sort of served as a bit of a blueprint for some of the more positive deals that we saw from the White House. Well, President Trump says the US will raise tariffs on Indian exports over the country's purchases of Russian oil. New Delhi has called the move unjustified and says its energy imports are a necessity. That's Bloomberg's John Herskovitz. So, John, I suppose what are the chances of any de-escalation in this friction between India and the US, which had previously, between Modi and Trump, secured quite a good relationship? And is there any room for India to move, given how structural its oil purchases are from Russia and that relationship is?
Sure. I mean, what we've seen so far in the past few days is that both sides have been digging in and really just not giving any ground on this. We have one key date to consider, August 8th. This is a deadline that Trump has given Russia to bring about a ceasefire. And Trump has also promised to punish countries that purchase Russian oil with secondary sanctions. India has emerged as the largest buyer of Russia's seabound crude. So we have this August 8th deadline, Trump increasing pressure ahead of that, but India has really relied on this oil from Russia. It's been able to get it at a bit lower market prices, which has helped its economy. Another key contention is the agricultural trade. India has really drawn a red line at GMO products from the U.S. For Modi, the farmers are a key part of his political support, and allowing in U.S. products, GMO products, and dairy products is something which is really politically difficult for him. So, you know, it's Modi and Trump, as you said, really had good ties. Modi was one of the first foreign visitors to the White House after Trump came back. The two have really shown an affinity for each other. The U.S. has relied on India as a counterbalance to China, but we're seeing unprecedented friction between Trump and Modi around this Russian oil import. So we'll see how it plays out with this August 8th deadline looming.
We're also expecting executive action for the trade deal between the EU and the US as well. What are the main areas that we're seeing some concern?
It's really the specificity. What sectors are going to be part of the 15% that has been agreed to, and what may not be affected. We have things like pharmaceuticals, agriculture, airplane parts, automobiles. These are things of concern for the U.S. Also, there are a lot of countries in the EU that just see this as fundamentally unfair, that the U.S. is hitting the EU with 15% tariffs, and for market access to the European market, its tariff rate is pretty close to zero. It's quite low for U.S. products. So we have this heading for contention and really just trying to find out what the specificity is going to be, what sectors are going to be hit, and at what levels. Clarity just isn't there yet.
Such a contrast in terms of the defiance that we're seeing from Narendra Modi versus how Switzerland is trying to play this, right? They want to try and get down that 39% tariff that took Switzerland by surprise. What are they doing to try to appeal to President Trump and the White House?
Yeah, Switzerland's in a really difficult position because it is the world's largest gold refiner, which really messes with its trade numbers. It's not something that adds a lot of, affects its balance, but with this gold position, it's difficult for Switzerland to find something that would really help change things. What they've looked at is pledges to purchase liquid LNG from the U.S. This may be more symbolic than an actual purchase. It's a landlocked country. LNG's often typically transported by ship, and Switzerland doesn't rely heavily on it. But this could be something that could help ease tensions with the U.S. and perhaps knock down this 39% rate that was announced by the Trump administration.
Bloomberg's John Herskovich there, taking a look at the state of play when it comes to some of these trade deals that are still in negotiations. Of course, we're still watching US-China as well, with those talks not yielding much decisiveness, perhaps, though, other than expectations of a prolonged truce. But let's take a look at how European futures are starting out the morning, as we saw that recovery in the previous session after the worst slide since April. The Swiss market in particular in focus, of course, seeing that retreat, with traders with the first opportunity there to react to that 39% US export tariff, and we'll wait to see how those overtures to the White House play out. But Euro Stoxx 50 futures looking pretty flat at the moment. The euro holding its own against the US dollar as the greenback really sort of steadied, and we are watching the Swissy off by just about a tenth of 1% when it comes to trading with the dollar there, as we see really the wait and see of the impact of Swift tariffs on the economy. The inability, if it was to come to that, to negotiate, could be quite impactful in terms of the overall impact on the Swiss economy. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to Japanese bonds, as we did see some of the concerns around tariffs and global trade implications from the Bank of Japan. We have heard sort of increasing voices of potentially even bringing forward the next rate hike or call after the sort of confirmation of the trade deal with the US. Some 60% of economists that the Bank of Japan watches saying the next hike could come as early as October. That this meeting that we saw, that the minutes had just come out in the last hour, really laid the groundwork for the next hike. There is also the risk of considerable yen depreciation as well. That presents sort of that risk scenario where the BOJ could opt for an earlier move, while highlighting upside movements in inflation. At the same time, though, we're waiting for another key piece of the puzzle, which is that continued wage growth cycle, and whether that has continued to hum along with expectations that the Shunto wage negotiations, summer bonuses would have added an extra boost to the latest numbers that we're getting. Mitsubishi UFJ Financial Group CEO says it's desirable that the Bank of Japan raises rates as soon as its next meeting in September, given Japan's higher inflation outlook. Hironori Kamezawa spoke with us exclusively about interest rates and Japan's recent trade deal with President Trump.
I don't think everything is completely clear yet, but the fact that an agreement has been reached is significant. I believe this gives us a clearer outlook than before. An increase to a 15% tariff is not a small number, and many sectors and companies are likely to be affected. On the other hand, the fact that we can now see some clarity is important. When we set our performance targets at the beginning of the fiscal year, we did so based on the assumption of an increase of tariffs to 10% plus a buffer, the level at which the global network and supply chain would not be disrupted. In that sense, the 15% increase is slightly higher than our initial forecast, which was closer to 10%, but it's still within the range we expected. Overall, regarding the outlook for the Japanese economy, I think the underlying economic recovery will remain intact. GDP will probably decline by around 0.5 to 0.6%, but the underlying economic recovery will continue. As for our current plans at MUFG, we believe that there is no need to make any major changes at this point. There are a few uncertainties, so we'll wait until the situation becomes clearer.
JGB yields are rising, not only for ultra-long-term bonds, but also for 10-year bonds. You've explained that you are taking a cautious approach to position building. Could you explain that? In addition, how high do you think 10-year bond yields will rise in the future?
We do not consider it prudent to publicly disclose our position at this stage. But our basic view is that given the current trend of rising interest rates in Japan, the key question is at what level we should purchase bonds. At the same time, as seen in the results of the recent upper house election, rising yields are an alarm bell in the policy debate over fiscal expansion. I think the trend will continue for a while, so I don't think it's a situation where we should rush to buy right now. While it's hard to pinpoint an exact level, if we assume a terminal rate of around 1.5%, the 10-year yield at that point would be around 2%. So the range from the latter half of 1% to around 2% could be a level where we could consider buying. But as I mentioned earlier, the current trend is toward a slight rise in interest rates. So I think it is important to watch the situation closely and wait for the right timing.
The Bank of Japan held its monetary policy meeting. The decision was to keep rates unchanged, but with tariff negotiations settling down, some are saying that the environment for a rate hike within the year is in place. What is your view on the possibility of a rate hike within the year?
Our official company view sees March next year as a possible timing of the rate hike. But personally, I think September or October is quite possible. I think that a rate hike in September or October could be desirable. The reason is that inflation is still quite strong. The number of items subject to price increases has grown by about 5 times compared with last year. And there's also the issue of imported inflation. In that sense, I personally think that this autumn is a reasonable time for an interest rate hike. But as various statistical data will be released in the coming months, if the growth rate figures are not as strong as expected when they come out, there may be discussions to take a wait-and-see approach. The timing could shift to around March next year. We'll see a period of careful monitoring of economic data, but I think it's entirely possible.
Hironori Kamezawa there, the CEO of Mitsubishi UFJ Financial Group, speaking exclusively with Bloomberg's Hideki Suzuki. Let's get you caught up with some of the corporate headlines that we're following. And Tesla has approved an interim stock award worth about $30 billion for CEO Elon Musk to keep his attention on the automaker. It includes 96 million shares that will vest if Musk continues to serve in the top post for another 2 years. The massive payout comes as a legal fight over a 2018 pay package drags on. Tesla's board calls the award a first step good faith payment. Taiwan's Honghai is selling an Ohio EV plant for $375 million, but plans to keep operating it to build AI servers for NVIDIA. The move reflects surging demand for AI infrastructure in the US and marks a pivot away from its struggling EV efforts. In a statement, the company, also known as Foxconn, says proceeds from the Ohio deal will be reinvested in the US. Coming up next, we take a look at the outlook when it comes to Asia's energy markets with the CEO of Hong Kong-based power generator CLP. Its first half earnings slipped more than 5%. That exclusive conversation is next. This is Bloomberg. Take a look at some of the regional PMI numbers that are just tracking through. Of course, interesting in the context of being forward-looking indicators, given how much uncertainty there is over the impact of these latest trade and tariff developments. But we are seeing some of these numbers come through, particularly the Hong Kong whole economy PMI hitting the highest in about 6 months. We've been watching the Japan one as well, with the services number hitting the highest in 5 months as well. This in light of calls for more tightening and sooner from the Bank of Japan. We're also expecting the outcome when it comes to the latest wage numbers as well, given that we have seen further development in those Shunto wage negotiations in the spring, as well as potentially bigger summer bonuses, and that could help sort of close some of that confidence gap, particularly for households. We are watching, when it comes to Hong Kong in particular, of course, the impact of that slowdown in China, as well as the trade truce continuing to play out there as well. We're hearing from Japan, Ishiba in particular, saying that the trade deal doesn't affect Japan's rice farmers, so really this sort of sense of still trying to, or he's still making an effort to defend what is perceived to be, one of the better tariff deals that was signed with the US. The chief trade negotiator, as Akazawa there, talking about a visit to the US from Tuesday. Well, Hong Kong-based utility CLP has reported a 5.5% drop in first-half net income. The company says declines in its Australian business and reduced contributions from nuclear and renewable assets in China was partially offset by a strong performance in Hong Kong. So joining us now is the CLP CEO, T.K. Chiang. T.K., always great to chat with you. So give us a breakdown in terms of where you saw those vulnerabilities in the business.
Yes, this half year, I think CLP has demonstrated our resilience despite the volatile energy demand and also the heightened geopolitical environment. This is basically anchored by our core business in Hong Kong, but moderated by the challenges in the mainland business and also the Australian business. Now, in the mainland, we experienced less wind resources and also more kind of network restrictions and also tariff pressure. Now, in Australia, because of the more intense competition in the retail business, despite the fact that actually our generation business in Australia is performing good. Our India business is continue to be stable, but there is a one-off impairment because of the transmission asset in India. Now, but our fundamental actually are strong. We have very good operational performance, high reliability in Hong Kong. We have also completed 300 megawatt renewable energy projects in China. We have also a strong pipeline in our markets. We have maintained an A-grade credit rating from S&P, and we will continue to uphold our disciplined investment criteria in order to generate long-term value to our shareholders.
It's interesting, TK, you say that this time around, in the most recent numbers, Hong Kong, that business actually anchored the upside, right? Does that mean the slowing demand picture that we saw earlier in the year is over? Are you seeing more input when it comes to demand from tourism as well as a pickup in the local economy?
Yeah, in Hong Kong, in the first half, we have about 1.7% decline in our demand. And actually, basically, it's because of a high base last year. Last year is a leap year and also exceptionally hot. So this year, we see the economy is increasing, is improving. And overall speaking, over the current 5-year development plan, we see demand to be about 1% increase per year. So, and also this year, we see very strong demand increase in data center business as well as EV charging. For data center, there was a 6.7% increase in the consumption. And right now, data center consumption already amounts to more than 6% of our total consumption. But for the rest of the year, of course, it will depend on the economy.
What's your projection when it comes to coal prices going forward? Because prices have fallen to the lowest in many years.
Yes, for fuel prices, this year basically softened quite a bit, and we can see that the fuel cost charge in Hong Kong has dropped from 46.3 cents to 43 cents, so already a 2.3% reduction. So because we have a monthly fuel cost adjustment mechanism, so any changes in the fuel cost will be timely reflected in our tariff. But I think given the current very volatile environment, actually it's quite difficult to predict the ongoing price trends.
Is there any interest in investing in Chinese nuclear power developers if the price is right?
Yeah, nuclear. We see nuclear power as a very effective and also efficient fuel for decarbonization. You can see actually not only it is price competitive, but also is relatively stable as compared with other kind of fuel. So and it's carbon zero. So actually, this will form a very critical component in our decarbonization journey going forward. Now in Hong Kong, we are now using nuclear power from Daya Bay Nuclear Power Station. It amounts to about 25% of the whole Hong Kong. Going forward, in order to achieve the 2050 decarbonization targets, so we expect there will be more zero carbon energy to be imported to Hong Kong from the mainland, and nuclear will definitely form a major part. And we are looking for investment opportunity into new nuclear power station in order to bring the power to Hong Kong.
When it comes to the ongoing demand for Hong Kong, have you seen an impact from the closure of businesses and just softer demand? Is that potentially the risk still going forward?
Yeah, I think if we look at the numbers, if we make adjustment due to temperature, actually this year we do not see any particular decline in terms of consumption. As I mentioned, last year it was more because of higher base, and this year if we make adjustment on the temperature, we see more or less on par with last year. Of course, we did not see a significant growth. I think the business is not in a very good operating environment right now, but we do see there are more measures introduced by the Hong Kong government to boost the economy. So we hope that the situation will improve.
TK, always great to chat with you around earnings time. TK Chiang, CEO at CLP. Well, Australia has activated an 850-megawatt battery operated by BlackRock-owned Acacia Energy. The $648 million Waratah super battery north of Sydney is expected to have the world's largest power output when fully commissioned this year. The New South Wales government says it will help buffer grid shocks during outages and is capable of supplying energy to almost 1 million homes for an hour. Well, BloombergNEF says Australia will need to ramp up the pace and depth of decarbonisation across multiple sectors to meet its international commitments and domestic net zero targets. The latest research says reducing emissions is expected to have a profound impact on the Australian economy. The NEF Senior Associate Tushna Mehta joins us now. So last month we saw the Australian government introducing a battery subsidy for households. It does feel like solar batteries is becoming way more mainstream. We've also got sort of the political mandate, if you will, post-election. Are we seeing that being taken advantage of?
Yeah, so let's focus on the battery subsidy. So Australia is a world leader in rooftop solar uptake, and we model that enough solar systems have been sold across the country to cover 1 in 3 households, which is really impressive. But batteries have been lagging the uptake of solar, and historically that's largely been because they have been unaffordable for many households and businesses. However, the federal government did announce a battery subsidy as part of their election pledge and have put 2.3 billion Australian dollars behind it. This battery subsidy will offer a 28% discount on the upfront cost of battery packs in the first year, and this discount will eventually wind down out to 2030 when the subsidy ends. So we do expect a big impact going forward, especially in the residential space.
Would there be a bigger impact if there were bigger precincts, bigger projects being considered?
Yeah, and on the large-scale battery side of things, business has been booming. In the first half of this year, we saw more installations than we did in all of 2024, with about 1 gigawatt of capacity coming online, and it's only uphill from here. We're forecasting total installations to increase from slightly over 3 gigawatts today to about 14 gigawatts by 2030, so it's pretty impressive. Now, this uptake has been driven by a range of economic factors, but policy has also had a huge role in this space.
Does that mean Australia is on track to meet its targets by 2030, or does that still fall short?
Yeah, it's gonna be tough. The federal government have introduced what is known as the Capacity Investment Scheme, and that's going to support 40 gigawatts of renewable energy capacity as well as dispatchable capacity like batteries. On the battery front, things are looking good. We're on track. We're seeing a healthy amount of growth, but it's the renewable space that's really struggling, and that's because we just see a lot of challenges in the deployment of solar and wind technologies today. Things like the electricity network just not being built fast enough, and by that I mean the poles and wires that connect these projects to the actual demand centres, but also things like the permitting process. Getting approvals at both the federal and state level is really tough today, and getting community support and buy-in for a lot of these big projects in regional areas is really tough for developers. So there are a lot of challenges, but despite that, we do think renewable capacity will double from about 26 gigawatts today to 48 gigawatts by 2030. And that is impressive, but we still don't think that will be enough to hit the 82% target. So governments will have to really ramp up their policy support, especially in the early development stages, if they are to reach this target.
BloombergNEF Senior Associate Tushna Mehta there with an update. And we do have more ahead here on the Asia Trade. This is Bloomberg. Australian Prime Minister Anthony Albanese has spoken by phone with the Palestinian Authority President Mahmoud Abbas. The rare call came as Albanese's Labor government considers joining other Western nations in officially recognising a Palestinian state. Albanese is also pursuing a phone call with Israeli Prime Minister Benjamin Netanyahu, in which he says he will advocate for a two-state solution. Over the weekend, an estimated 90,000 Australians, that's the police estimate, of course, organisers estimate as much as 3 or 4 times as much as that number, but marched marching across the Sydney Harbour Bridge in support of Gaza in what is really the first anti-war protest that we've seen across the bridge. Let's get more with our next guest. Donald Rothwell is a Professor of International Law at Australian National University. Really great to have you with us. So set up for us, there's obviously one set of expectations, as we've seen over the weekend, in terms of the reflection of how a lot of ordinary Australians are feeling about the humanitarian crisis and potentially what, at least symbolically, diplomatically, what Australia's government and leaders can do from here. But what is the process of a recognition of a Palestinian state, and what are the steps involved here?
Well, quite simply, it's a decision that needs to be made by the Albanese government. It's confirmed by the cabinet of the Albanese government, and the Prime Minister's made that clear in recent statements. Once the cabinet has made that decision, well, then a formal announcement can be made. Normally, those types of announcements are made in Canberra, but of course there's something of an expectation that if the Prime Minister is going to make this announcement on behalf of Australia, it may well be made at the coming United Nations General Assembly meetings in September in New York.
I thought it was interesting. We heard from Foreign Minister Penny Wong this morning, and one of the things that she said is that sort of recognition or some action to be taken while there is still a Palestine left to acknowledge, right, as we come up to almost 2 years of this conflict. Is time of the essence here, or is it important to sort of make sure that all of the criteria that not just Australia is considering, but some of the other nations as well, Australian allies, are looking at?
Well, from a legal perspective, I think all of the criteria have been met. But we have seen from the United Kingdom and Canada, for example, a range of additional factors. And indeed, both the Foreign Minister and Anthony Albanese as Prime Minister have been outlining a range of criteria that would need to be met. Perhaps most importantly, the disarmament of Hamas, the release of the remaining hostages, but also reform to the Palestinian Authority. But I think we're also getting a sense, perhaps in the last 24, 48 hours here in Australia, that there's perhaps a growing sense of urgency on the part of the Australian government. The Foreign Minister this morning in other media comments has made the view known that Australia is becoming increasingly concerned that there will be no Palestine left to recognise, and I think that's a recognition of the increasing extent of the military operations of Israel in Gaza, but also, of course, threats on the part of the Israeli Knesset, and perhaps even alluded to by Benjamin Netanyahu, that Israel might be seeking to annex part of the Palestinian territory, whether that's the West Bank or perhaps even the Gaza Strip. So Australia is clearly concerned about those developments that are occurring in Israel and doesn't want to get left behind in terms of recognising formally the existence of a Palestinian state.
You raised some of the points that I was about to ask. If it is in fact the situation that Israel, Benjamin Netanyahu, or at least some of his cabinet are not interested in a two-state solution, there are worries about settlements. What are the options available to countries like Australia and other international players to be able to change that course?
Well, normally the United Nations Security Council would be the obvious forum in which these matters would be discussed, but the Security Council has really been neutralised as a result of the United States veto and its opposition to any clear Security Council action in relation to the conflict in Gaza. So that's why I think we're increasingly seeing Australia join with other like-minded countries, led by other two permanent members of the Security Council, France and the United Kingdom, try to move forward on that. But there's a range of initiatives and a range of measures that would need to be taken, including, most importantly, as you're alluding to, placing pressure on Israel to ultimately recognise the existence of a Palestinian state and also legitimise the two-state solution moving forward.
Does the turmoil surrounding the ICC case in Israel and Benjamin Netanyahu kind of paint a picture of how, I don't want to say irrelevant, but perhaps how hopeless some of these international institutions are in the face of this scenario?
Well, I wouldn't say that as an international lawyer, obviously, and many of these international court cases, whether it's the International Criminal Court or the International Court of Justice, will take many years to play out. It's really the United Nations Security Council, which is designed to deal rapidly with emerging security situations. But as I've said, the Security Council has really been quite neutralised throughout much of this conflict. So that's why we're possibly looking at alternate means and options in terms of trying to deal with this. And one of the big issues would be is that if there was to be a ceasefire and if there was to be a recognition of an independent Palestinian state, who would provide security for that independent Palestinian state? And there's been some discussion already as to whether or not France or other Middle Eastern states, Gulf states, might be involved in that process. But providing security ongoing for Palestine, of course, that would result in security for Israel, is clearly going to be critical moving forward.
If you take a look at the examples of Afghanistan and Myanmar that you've pointed out, what does a recognition of a state mean in terms of permanence and the sort of inability or, I guess, unwillingness to revoke that?
Well, once a state has been recognised, you can't withdraw that recognition unless that state happens to disintegrate, and there's been examples of that have occurred post-World War II. The former Yugoslavia might be a good example, or of course the former USSR. But once a new state is recognised, Australia, for example, or the United Kingdom or France or Canada can't withdraw that recognition because they no longer recognise the existence of that entity as a state. Governments can come and go, and of course we've seen that very much in the case of the Taliban in Afghanistan, but ultimately the state remains as a legally recognised entity for the purposes of international law. And that's to be distinguished from whether or not a recognised independent Palestine would gain ultimately membership of the United Nations, which of course currently it doesn't have.
Do you have expectations that all of these criteria, including demilitarization of Hamas, including reform of the Palestinian Authority, including the release of all of the remaining hostages, is likely to happen by the UN General Assembly? And if it doesn't, what does it mean in terms of, I guess, not even be able to make this gesture, as Prime Minister Albanese has referred to it, knowing that Australia wants it to be more than just a gesture?
Well, I think what we can say is that given current events, that timeline seems to be very ambitious, and unless there was some sort of radical change in the circumstances, and critically, Hamas, of course, is key to this in terms of their ability to agree to release the hostages, and we've seen comments from them over the last 72 hours as to why they may not release the hostages until there's a full recognition of an independent Palestinian state, also including references to Jerusalem being the capital of an independent Palestinian state. So those, of course, are very politically contentious issues. So at the moment, we perhaps are reaching an impasse in terms of Hamas not prepared to make any modifications or adjustments or concessions. Likewise, Israel and the United States, at one level, seemingly to step back a little bit from trying to be proactive in terms of bringing about a resolution of this issue. But yet, on the other hand, we've got this other group of collective states seeking to move forward with Palestinian recognition.
Donald, really great to have you with us. Donald Rothwell, who's a Professor of International Law at ANU. We do have more on Australia Ahead every Tuesday at 10:40 a.m. if you're watching here in Sydney, 8:40 a.m. if you're catching us in Hong Kong. You can also tune into the Bloomberg Australia podcast, delving into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. More ahead here on the Asia Trade. This is Bloomberg. Some of the other stories that we're following this hour: Brazil's former president Jair Bolsonaro has been ordered into house arrest for defying a ban on using social media while standing trial over an alleged coup attempt. Justice Alexandra de Moraes of the Supreme Court signed the order on Monday after Bolsonaro's supporters staged rallies across Brazil. The judge said Bolsonaro acted illicitly by addressing the demonstrators over social media. Australian Federal Police have charged a Chinese national under foreign interference laws for allegedly collecting information on a Buddhist organisation targeted by Beijing. The woman is also an Australian permanent resident, and police say they expect more arrests. Australia introduced foreign interference laws in 2018, and the case raises the risk of renewing tensions between Canberra and Beijing. Well, Beijing faces another round of torrential rain just a week after downpours unleashed flooding that killed at least 44 people. The city's weather service raising its rainstorm warning to red on Monday, with the heaviest rainfall expected through dawn on Tuesday. And Hong Kong has also issued a black rain warning, its highest level alert for the fourth time in a week. The government has shut schools for the day. Courts have been adjourned until at least 11 a.m, but trading does continue for the Hong Kong Exchange. Speaking of which, take a look at how we're setting up when it comes to the open of Greater China trading over the next hour or so. We are seeing broad upside across markets, given that we've seen the return of sort of dip buying across the US session after the shock that came through from those payrolls numbers, but it does look like sentiment getting a boost. That is it for the Asia trade. Our markets coverage continues with the China show next.